Hi, I'm Ambere and welcome to Crimson Insurance's new blog. Today I'm really excited to have my very first guest, Ed Diaz with Opus Advisors. And Ed is here because I am curious if insurance, or does insurance tie into mortgage lending?
Very good question, and I think it's one of those questions where people think, well, it's kind of obvious. It really isn't. It absolutely does tie in. Insurance ties in. It plays a huge role in the whole purchasing process. Usually it's not addressed until the end, the very end, when it's time to fund the loan. I think it's a big mistake because it puts people in a situation where they don't really do an honest assessment of what they actually need. They're just in a reactive mode and just give me the insurance so that I can get my keys to my house and I can move on. But what's important to know in this process is that you are required to pay for a whole year worth of insurance, whether it's a single family residence or not. You either pay it at the time you show up to the title company to sign all the paperwork, or you buy it before, which is what I recommend. You get a really good assessment so that you're not buying too much or too little insurance, and then just provide the documentation to the title company so that then you can fund and close your deal. But it's really important because I see people, they just gloss over it.
Excellent. Well, I certainly have seen that myself. People will call me up while they're at the title company and need a policy right there in order to close the deal. So I wasn't sure how that played in, so thank you so much for answering my question. Until next time, thank you for coming to the Crimson Insurance blog.